What's going on, everyone? In this video, I want to talk about the time that you need to stay away from trading the NASDAQ futures. Now, again, this is going to be a little bit of an open topic and open discussion. I know there's a lot of people that make money off the open. First 5 minutes, first 1 minute, first 20 minutes of the market. But for a lot of you traders out there, you're going to find that you struggle the most with losses, with emotional control, and with losing, blowing up accounts in the first 30 minutes of the market. Now, that could change, right? We've got a lot of big things going on here in the markets. We've got tech earnings, we've got the election, we've got news drops, numbers, everything. There's a lot of stuff going on, okay? We've got, to take some time and start to really understand that you're not really going to change your life or your yearly P&L in the last month and a half of trade. Is there going to be some opportunities to make money? Absolutely. But to kind of dive in and get a little bit more into what I'm talking about, in this current market cycle, which for me and in what I've experienced and just from my experience, the last month to month and a half of trading has been a little different than what it's been in the NASDAQ months prior. And that's typically a lot of ranging and chopping and backwards, big ranges off the open. You're getting a lot of moves in the overnight session that are getting reversed. You're getting a lot of things that are happening going into New York lunch hour where the market is stagnant and then it's breaking out later or breaking down later. And truth be told, if you look at the right-hand side of the screen, that's the daily time frame that we're looking at there. And we're looking at the triple Qs on the right-hand side because I was helping out one of the traders in Evolution Traders, and we were going over options plays, and we're looking at the Qs, but it's the same chart more or less. So looking at the Qs on the right and the NQ 5-minute time frame on the left. But you're going to see that, if you kind of just really scroll back here to September, we've been in this trade range since we hit highs on about September the 26th, right? That was the last time we kind of hit these highs on September the 26th. We pulled back, we put in a new high, we pulled back, and today we are breaking out. I'll get to that in just a second. But you can see here for the better half of a month and a half, we've been essentially going sideways. So you're getting some movement up, which is chop. You're getting some movement back down, which is chop. Now, again, there's some clean moves in there. But if you look at the left-hand side of the screen, look at the big drastic 91-point range flush candle. I know there was a lot of traders who jumped in on momentum on this short position, made some really good money. I know there's also a lot of traders who were taking it at the bottom of the range once we opened up the second 5-minute candle and started to kind of push down a little bit harder. You immediately got trapped. And in a market that is seemingly not putting in new lows, but in fact kind of making these higher lows, you don't really want to be going short. If anything, what you want to be doing is, if you do find a momentum short, see green, take green. Okay. But what you really realistically want to be doing is taking support bounces off of rising supply, whether that be on the 4-hour rising supply, or rising demand, or the 1-hour rising demand, or a daily rising demand, and try to find those entries for bounces on a smaller time frame. Okay. To go back long. But if you just kind of sat out the first 30 minutes of the market, you're going to avoid a lot of the fluff. You're going to avoid a lot of the back and forth movement. You're going to avoid a lot of the losses. Now, that's not to say that you're not going to take any losing trades after the first 30 minutes, but you're going to take a lot less losses. And that's what trading is really all about, is taking less losses and protecting that capital and making sure that you can kind of see the market as clearly as possible, to try to put you in the best possible situation to make money. And you're tending to get those moves after the first hour candle, 30 minutes have closed. And then you're starting to see, okay, where can I pick my spots? Should I be looking short? Should I be looking for a continuation pattern back to the long side? And should I be waiting for a specific level or zone to break out? Now, going into tomorrow, I absolutely love the NQ chart going long. What I would prefer to see is some type of pullback in the overnight session or even pre-market and off the bell. Any type of little pullback that we see, I'm going to avoid those shorts, because this daily chart is finally looking like it's ready to start breaking out. If you let me go to the NQ chart so we can give you guys those exact prices. But if you look at this NQ chart and look at this daily, This is a massive daily candle breakout that is starting to form here, a 315 point range. We're actually getting into this upper channel where, technically speaking, this could start the next leg higher into 21,000. Now, you definitely want to start to catch that trend. So if you guys do swing trade or trade stocks and options, you're going to want to be watching the Qs, watching the NQ futures to see if we hold this channel. Now, if we pull back tomorrow and we close inside range, meaning we kind of break the highs, but then we don't really close over those highs and we start trading back in the middle of the range, then it's all bets are off. We're just back in the same spot where we started. If we pull back off the open, okay, or anytime in pre-market, and we trap those early sellers and we start to push up through today's highs, that's the long position. That's where you're going to want to be, and you're going to want to catch an explosive move going to the long side. Again, if you go to the weekly chart, take a look at this weekly chart. This weekly chart is absolutely setting up for the next leg higher. You can see here we're taking out the prior 2 weeks highs here and putting in a new high, and this weekly chart has room all the way up to 21,000. So 21,000 could be that next area that we're looking for to target on this next potential push higher, which is going to give us around 250, 300 points worth of upside room. And then you've got those all-time highs sitting, that we're sitting here at around 20,983. So between 20,980s and 21,000 is definitely going to be that next price target. And to see what happens once we get these elections and everything out of the way, earnings and all that good stuff out of the way, are we going to potentially be putting in these new all-time highs? Again, I hope you guys, take a little bit of value from this video. It'd be in your best interest just to sit out the first 30 minutes. A lot of times traders feel like they're missing out on something if they're not trading right off the bell, if they're not catching that first move of the day, that first candle. Guys, you're not missing much. You're going to make more money if you just sit back and you wait. Allow the charts to develop. Don't be the early trader that's getting trapped off the open. Let the first 30 minutes digest. I've been having a lot more success when I let the first 30 minutes pass. I want to see what that first 30-minute candle does. I want to see what that first hour candle does, because today was a prime example where once we really started to push up over that 30-minute opening range break and we started to really push these highs, every pullback into this 20-period moving average was a good position to bounce. Once we pulled back into this 20-period moving average, it doesn't mean go short just because there's a setup there. The momentum is strong, wait for it to reclaim and then push it forward. Again, I'm just going to continue to scroll. Every time we came down into this 20-period moving average, we bounced every single time today. That is a strong market. You are not trying to short against a trend. Now, for all the smart asses out there that are going to say, well, I made some money shorting, once we pulled back, that's great, but you're going against the trend. Is there a market for you there to make some money doing that? Of course, but you got to really know what you're doing. It's not for everyone. It's definitely not for the inexperienced traders. So again, if you are a little bit inexperienced or you're just looking for the easier trades on a day like today, you're waiting for the pullbacks to bounce. You're waiting for the pullbacks to bounce. And what levels are you waiting for it to pull back into? It could be any level. I'm using the 20-period moving average. You can use a 9 EMA. You can use the 50. You can use the 10. Whatever you would choose to use. You can use the VWAP. Wait for those levels to get back tested, and then once price pushes off of it, you want to be back long. Today, we were able to get back into the green, $500 on the Top Step Express funded account. Yesterday, we took a little bit of a hiccup loss. Again, it is what it is. That's the first loss that I've had in probably about 2 weeks. Again, those loss days are going to happen. There's nothing we can really do about it. I got to take it on the chin. What did I learn from yesterday? Make sure I have that bracket stop order in there. I try to be a little bit fancy there and give myself a little bit more wiggle room so I can catch the move, and it kind of bit me in the rear, right? Again, 30-minute opening range break failed yesterday. That was a trade that I lost on. Again, we come in today, we don't worry about what happened yesterday. We're going to take the same trades again today. If they present themselves, we're just going to fix the little mistakes that we did. And again, essentially, we fixed those mistakes and we're right back to where we started to come into the week. So no harm, no foul. Account balances are very healthy. The market is looking very, very strong. It's looking great. Again, before anyone starts to say, well, the market's going to pull back tomorrow, it can drop. The market can go down tomorrow too as well, guys. The market can go up, but I want to be ready for either side of the trade. Again, I'm not going to go short until we confirm at least the first 30 minutes or hour range to the downside. And there's got to be potential into the next level of demand for me to go and get into that short. So again, let me kind of break down a situation. Let's say, God, look at this daily chart today, guys. I mean, absolutely beautiful moves. But let's say, for example, we open up and we lose 20,650. And then we chop around for the first 30 minutes and then we confirm the low of that 30-minute opening range. I'll take that short because we've got a lot of room down here to 20,600. There's some opportunity to make some cash. That's an example where I might go short tomorrow. But other than that, I'm looking for the pullback. I'm looking for the hold. I'm looking for the trap. And then I want to catch it back up to the upside and go red to green. That would be ultimately the ideal situation for me to get into. I hope you guys enjoy this video. Again, sit out of the first 30 minutes, guys. Especially coming into Q4, there's no real reason to chase the move right off the open. Just be patient and allow these charts to set up. You're not going to miss anything. You're not going to make $1 million, trading the open. Just have some common sense, right? If things are not really working off the open, stop trading the open. Again, this is the troublesome spot. Look at the left-hand side of my screen. This downturn, this bounce, this downturn, this bounce. This is where traders are getting chopped off the open. Retail traders are getting absolutely destroyed in this time frame here. Wait for things to open up. Wait for things to pull back. Start to see the chart clearly. Hope you guys enjoy the video. I'll catch you guys all in the next one.